Welcome to Real Estate Views with Karen Lynch. Today's topic for discussion is new home buying tips for new home buyers. I have with me here today Steve Schneider, who is a friend and business associate that I work with. He is the senior loan officer at Loan Depot, which is one of the largest mortgage lending institutions in the U.S. Thank you so much, Steve, for being here with me today. He is going to hopefully share his insights to millennials and other first-time home buyers so that they can feel a little bit more comfortable in approaching a loan for a new home. But before we jump into the topic, I do want to take some time and give you a little bit of background about Steve. He has been in the industry for over 23 years and has worked extremely hard to build a strong business by providing excellent customer service to folks like myself, realtors, attorneys, financial planners, etc. I know he's very valuable to me, and I'm sure all your other clients as well. And in fact, has earned and was recognized as the five-star
professional,
right? Five-star professional by Chicago Magazine. So thank you again for being here. I know it's a busy time of year.
It is. Thank you for having me.
And I do appreciate your time. So let's just jump into the topic at hand. The first question I have is, what would be your number one piece of advice to new home buyers in preparing to obtain their very first home loan?
The number one thing I would say is to contact a mortgage expert,
Okay.
a professional. There's so much, I think all of us do as much research as we possibly can on the internet before, and there's so much information.
Right.
But it's always about what applies to you, and people can drive themselves crazy trying to figure out and answer all their questions that can't necessarily be answered just looking at all of this information on the internet. So it's really getting in front of, or on the phone with, or whatever it may be, with a mortgage expert, someone who's done it, ideally someone local, who can talk about their individual situation.
Right. Okay. Yeah, that's true. There's so much on the internet, and how do you decipher what's right, what's wrong?
Exactly.
And as you said, what's best for you. So that makes sense. Yeah. And so I'm just going to check my notes here so I don't forget anything. So what should first-time home buyers expect about the home loan process and requirements?
So it's often one of the things they fear the most, which in reality, it's not a huge thing. Again, it's getting to that mortgage professional first. And there are a lot of good online tools. Our company is one of the top in the technologies, from the technology standpoint in the industry. But most everybody has online applications. Sometimes people prefer to do them. Sometimes they'd rather talk on the phone about it and give it manually. And so it just depends what's best. Yeah. But what they can expect is getting all their information, their employment information, their asset information, where the down payment's coming from, get their credit run. Okay. And then a good loan officer is just going to take it from there. Okay. Because you're going to get pre-approved for a loan. So you can get a pre-approval over to a realtor. And then and that way you can put an offer in, and it's credible with a pre-approval there. They've already spoken to a lender. Okay. Then we collect documentation, which these days sometimes is less than it used to be because of all the technology available. But it goes down to the individual situations.
Right.
And then we simply guide through the process. An underwriter reviews all the documentation. There's sometimes an appraisal required on the property. And typically loans close within 30 to 45 days.
Okay. Which is definitely much quicker than historically.
Yeah. And it depends on the loan. It depends on what time of year. Right now, since the rates are extremely low and they've dropped to the lowest they've been in the last 2.5 years, there are many refinances. So sometimes the pipelines get more clogged and things can take longer. It just depends on the specific lender at the time.
Right. Okay. So understanding that they can talk to you to get pre-approval, or they can use a technology-based application process. Either one is okay.
Absolutely.
But also just knowing about their financial, scenario, if you will,
Absolutely.
and being able to provide documentation about that.
Absolutely. And the earlier the better, because sometimes people they're trying to figure out how they're going to get down payments, and they might have it, but there might be a gift situation. They might be able to borrow from the retirement. They might need a cosigner. All of these things, the earlier the better.
Right.
They might have things on their credit report that they were unaware of, or there might be a way for us to look at their credit and improve the score, which will save them thousands of dollars over the life of the loan.
Right.
Any number of things. So the earlier the better.
Okay. And that's valuable, right, in of itself.
Absolutely.
To be able to do that. Okay, cool. So do you have any specific first-time homebuyer programs that people should be aware of?
So there are offered by different communities, different state, it's state by state, community by community sometimes. It just depends, once again, I keep on saying this, but on the personal situation.
Yes.
So sometimes there are first-time home buyers, and I often get asked this, but if someone's putting down 5, 10%, 15, 20%, whatever it may be, putting down enough money, have good enough credit, all of the above, they might be in a better situation and get a better rate, better pricing than someone who's getting a first-time home buyer program.
Right.
So it completely depends. Sometimes it's down payment assistance for, let's say, $5,000 to $10,000, but you might be paying a higher interest rate to get that.
Right.
And so it depends. We look at those, but it may or may not be beneficial all the time.
Right. But they could start off in that way and then refinance down the road.
Potentially as well. And sometimes, as long as they don't sell it, there's a variety of different situations. As long as they don't sell, they don't have to pay it back. Sometimes it's forgivable. Sometimes it's over a certain time. Yeah. So it completely depends on, I know I keep saying that, but every individual situation for different clients.
Okay. So I think that the best tip here would be, going back to your very first answer, is to definitely consult a loan expert. I can guide you in the right direction. But because there is so much flexibility today, and obviously your willingness to make it work for all parties, that's the best advice. So again, thank you so much. Don't be afraid to call, and don't be afraid to ask questions, regardless of your experience. So thank you so much again.
Absolutely.
And hopefully that was helpful for everyone listening. Thank you again. Bye-bye. Awesome.
We did it.
Yay. See, it wasn't too bad.
No, not too bad.